Now, British homeowners are set to feel the effects of rising interest rates, some due to face monthly payments increase of up to £200.
Yes, the Bank of England increased the base interest rate on Thursday, making it the 12th consecutive rise in the last 2 years.
Let's talk to housing and property expert Richard Blanco. Richard, good to see you this morning. I mean, look, there's no doubt this is going to bite a lot of people.
Good morning. Yes, that's absolutely right, Stephen. Although, interestingly, some research out by the Resolution Foundation suggests that 80% of outstanding residential mortgages are actually fixed. So it's not feeding through as quickly as it might do. And so in terms of, the Bank of England wanted to use this lever to kind of stop people from spending as much, it doesn't feed through straight away. Having said that, some 1.5 million people will come off fixed rates at some point this year, and many of them will have fixed a couple of years ago at rates as low as 1.25%, and will be refixing, if they decide to fix again, at rates between 4 and 5% at the moment. So that's going to be a really hefty jump that lots of people will be finding themselves in.
Really, really difficult. What's your advice to people that are coming off of fixed rate mortgages now and are seeing that massive jump? Is it right to go for another fixed and it will be higher? Or do you think tracker and hopefully things start to come down?
Yeah, ride the wave a little bit.
It's a very good question. And I mean, obviously do speak to a mortgage broker because everyone's individual situation is different. But interestingly, at the start of this year, brokers were tending to suggest going for trackers because we were hoping that rates would start falling later on this year. But it does look now like rates will not start falling until 2024. So actually, if you can get as cheap as possible a 2-year fix, then you might well be better off fixing for 2 years. And also what the Bank of England are suggesting, one of their graphs shows that commentators think that not only will rates not start falling until next year, but they will only drop down to 3.5% now, whereas some commentators, Capital Economics, for example, thought they would drop to 2.5% next year. Looks like that fall is going to be a bit slower and it's not going to fall quite as much as expected. So 2-year fixes could be a good bet at the moment. There are still some good 2-year fixes around. I've seen them as low as sort of just below 4%. So if you need to change soon, then get onto it ASAP.
Just briefly, Richard, what's this doing to the housing market?
Well, it's certainly making people think twice about taking out a new mortgage and buying at the moment. We've seen the market slow down. Rightmove figures show that it was taking something like 74 days on average for properties to sell in London. We have seen the market get a little bit more buoyant, and again, it's defying expectations because we did expect prices to fall anything between 5 and 12% this year, and the market doesn't seem to be suffering quite as badly as we'd expected. So, again, some surprises there. Of course, we know from the Bank of England that we're not expecting to go into recession this year after all, and that's one of the reasons why the Bank of England is still putting rates up.